Philippine markets have opened this Thursday. The PSEI up 0.2% at 6,180. The stock market rose yesterday, Wednesday, by 0.8%. The Philippine peso has opened slightly stronger at 57.68 to a dollar. The local currency closed yesterday, Wednesday, slightly weaker at 57.69. As the world grew wary about the day of Trump's shifting trade policies, the Bangko Sentral last Tuesday released a statement saying the country's balance of payments position is forecast to be weaker this year and next. The reasons cited include slower global trade, subdued investor confidence linked to increased uncertainty in global trade policy, and geopolitical developments. Well, with us now for more is Peter Luis Garnace, Unicapital's equity research analyst. Good to see you, Peter. Welcome to the program.
Hi, Kathy. Good morning. Thank you for inviting us.
Yeah, you know, the Bangko Sentral had me at its May 24 press release when it read, global economic uncertainty weighs on the balance of payments outlook. What do you make of it? And what are the likely implications to its very mandate of what it was communicating?
Yeah. So with the BSP forecasting a wider BOP position deficit in the next 2 years, that means 2025 and 2026, this means that there will be an expected slowdown or modest growth in some of the sectors. And this could mainly be attributed to the ongoing global trade uncertainties, leading to muted investor confidence. I think in the BSP's outlook, they are expecting a wider current account deficit brought about by the higher trade in goods deficit, resulting from flattish growth expectations. Thus, the government expects the country to import more goods. So in relation to this, I think the government will release the trade balance data tomorrow, and we will see if the trade deficit has widened or narrowed last month. So this could also be exacerbated by lower net receipts in trade in services, which includes the BPO industry, as well as OFW remittances. And both are expected actually to post slower growth. In our view, both the BPO and remittances will remain resilient as outsourced services are not yet part of US President Trump's tariff agenda. Meanwhile, we think that growth in remittances can be sustained.
But it could very well be, Peter. So that's the concern there. Immigration policy also affecting OFW remittances. What's the risk there? And what sort of a trade balance are we looking at towards the time that it does happen?
Exactly. So I think the BPO industry is quite in the risk if ever President Donald Trump imposed tariff. However, we think that the BPO industry in the Philippines would be more resilient, given that we have skilled workers here in the Philippines. And I think the key there is to really equip our BPO workers with skills, high value skills, to be at par in terms of to be more competitive, or at par in terms of competition with their peers in the US. And also in terms of remittances, we think that the Filipino migrants in the US are more of permanent residents, so they're not that much at risk in terms of the immigration policies of President Donald Trump.
It's good to know that nuance, but when you look at that laundry list of reasons why one would think that the Bangko Sentral would be better off dovish, you really want to ask, where is the silver lining? When you take a look at this list, and I want to put it up for you on the screen, except for net foreign direct investment liabilities revised upward and the sustained net inflows from the financial account, all other components are looking weaker.
Right.
So might that mean that the Bangko Sentral will really have to cut rates by April 10th?
Yes.
And by how much?
Yeah. Well, the BSP has also signaled they became dovish recently. The BSP Governor Eli Remolona has signaled there's a good chance for them to cut by 25 bips in their April meeting. So I think this could be justified by a more stable peso, also inflation within range, the target band of the government within 2 to 4% inflation. So I think there's still room for the BSP to cut interest rates in their next meeting, and we think that it could lift up market sentiment.
Now, before that decision comes, we're going to be expecting the release of at least 300 billion pesos into the financial system as the Bangko Sentral implements the follow-through of the triple R that it announced last February 21st. So do you think that that extra money is finally going to be put to good use in this round? Or do you think banks are going to opt to go for the less risky bets, investments in, say, treasuries, rather than lend them out to you and me?
Right. So the 200 BIP reduction of reserve requirement ratio for big banks from 7% to 5% will be, I think, effective tomorrow, March 28th. So we believe that increasing liquidity in the financial system will really enhance the transmission of policy or of monetary policy. So this could eventually stimulate economic growth by enabling banks to extend more loans at lower interest rates. However, again, just a caveat, you're correct. Given that interest rates remain elevated, this may somehow offset the triple R cut as banks and investors would find it more attractive to park their money in central bank securities rather than lending it out.
So against the backdrop of all these uncertainties, well, what is your assessment then of the corporate earnings just reported? Is the silver lining anywhere there?
Well, in terms of corporate earnings, although this is in a rear view for 2024 corporate earnings, we have seen many companies reporting good earnings so far. And I think looking forward to 2025, we think that we're expecting the market to grow by still double digit. We're expecting 10% growth for the market in terms of EPS. And at current levels of the market, it's still attractive. It's still undervalued, trading at a PE of 11 times. So we think that there's still more upside in the current market.
So what does that mean? Go full on stocks, or do we mix it with bonds and hold a little bit of cash?
Well, I think diversification is still a strategy in this kind of market. So I think we can hold stocks, fixed income, and cash. We just need to diversify this current environment.
Okay, so diversify is the operative word there. Thank you so much, Peter. Hope to see you the next round in the studio. Peter Luis Garnace of Unicapital Securities.